Hello everyone, and welcome to today's presentation. I'm excited to share a fascinating case that highlights key themes in the world of venture capital, valuation dynamics, cloud infrastructure strategies, and the rise of AI-native startups. The title of our session is Why This News Case is a Must-Learn for Students, Faculty, and Industry Stakeholders. We'll explore a live example involving Lightspeed's entry into the race for Neysa, a cloud infrastructure startup. Throughout this session, we'll cover how competitive VC investing unfolds, the significant valuation jumps, strategic moves in cloud infrastructure, and how AI-native startups are becoming billion-dollar contenders. Let's dive in and explore what makes this case so insightful and relevant today. So, on this slide, we see that three heavyweight investors are now competing for a stake in this promising company. One of the most notable is Lightspeed, a well-known venture capital giant. They've recently entered the race to invest in Neysa, which is gaining a lot of attention as India's fast-growing cloud infrastructure and AIOps platform. This development is significant because it highlights the increasing interest from major investors in India's tech scene. What's really happening here is that Neysa is at a pivotal point, and these big players see the potential for substantial growth. The fact that Lightspeed has joined the race underscores the deal's importance. It's shaking up the Indian tech landscape. So this isn't just a regular investment. It's a sign of how much confidence there is in Neysa's future. This all ties back to our broader theme of rising innovation and investment in India's technology ecosystem, showing how global giants are paying close attention to this vibrant market. Let's take a closer look at the key players and their strategic positions. First, we have existing investors like Nexus Venture Partners, ZA7, Bloom Ventures, and NTTVC. Their focus is on a strategic financial play and sector conviction, meaning they are investing based on their confidence in the industry and the long-term potential of the company. They're exploring the possibility of taking minority stakes, which allows them to support growth while maintaining flexibility. Moving on, Lightspeed is another notable investor. Their intent is driven by the prospect of high upside and positioning the company for a future IPO. Like the others, they are exploring a minority stake, aiming to benefit from significant growth potential without immediate control. Then we have SoftBank, which is looking for control and a long-term play. Their focus is on restructuring and scaling the business, and they are negotiating for a majority stake to ensure they can drive strategic changes and growth initiatives directly. Finally, Blackstone is also a key player, but their position is more aligned with strategic investment and value creation. Overall, these players each have distinct strategic positions, some seeking minority stakes for growth and sector exposure, others aiming for control to reshape and scale the business. Understanding these positions helps us see how the investment landscape is shaping up around this company and how each investor's goals align with their strategies. In less than a year, we've seen extraordinary growth, with our company's value increasing 4 times over. This is a clear sign of how quickly we're moving and the strong market confidence in our potential. Currently, we're in negotiations for a proposed valuation of $300 million, which reflects the significant progress we've made. Looking back, our earlier valuation in October 2024 was just $76 million. This jump highlights an astonishing surge in valuation, more than 4 times in such a short period. It really underscores the momentum we've gained and the exciting opportunities ahead. This rapid valuation increase is a testament to our team's hard work and the market's recognition of our value. Let's take a closer look at what Neysa offers with our end-to-end AI operations platform. At its core, we focus on enterprise AI management, making it easier for organizations to oversee and control their AI initiatives seamlessly. One of the key features is real-time performance tracking, which ensures you can monitor your model's effectiveness and make adjustments on the fly. Our cloud-native monitoring tools are designed to integrate effortlessly into your existing infrastructure, providing continuous insights without disruption. We also provide tools for seamless AI integration, simplifying the deployment process across various systems and workflows. When it comes to AI model deployment, Neysa leverages enterprise-grade cloud resources, offering scalable and secure compute infrastructure to support demanding AI workloads. All these elements work together to create a comprehensive platform that streamlines AI operations, reduces complexity, and maximizes value. Ultimately, what Neysa does is empower your organization to deploy and manage AI solutions efficiently, ensuring you stay ahead in this rapidly evolving landscape. And that's the core of Neysa's compelling value proposition, making enterprise AI both accessible and effective. Investors are willing to pay a premium for founders who have a proven track record. This is because such founders significantly reduce the early-stage risk that investors typically face. When a founder has demonstrated success in the past, it gives investors more confidence that the venture will succeed again. For example, our co-founder Avinash brings extensive expertise in tech operations, which adds a lot of credibility to our enterprise. His deep industry network and proven execution capability are key assets. Notably, Avinash is the founder of NetMagic, which is India's oldest data center services company, a testament to his ability to build and grow successful businesses. On the other hand, Sharad Sanghai's founder pedigree is a real competitive edge. His experience and reputation in the industry further strengthen our position. Overall, these proven backgrounds are not just credentials. They are strategic advantages that help us attract investment and accelerate growth. This aligns perfectly with our overall theme that strong founder credibility can make a real difference in the success of a venture. Let's talk about the clear path we've mapped out to the public markets within the next 3 to 5 years. This timeline gives us a realistic window to prepare and position ourselves for a successful IPO. The potential for an IPO is significant, driven by the rising demand for AI infrastructure across various industries. As AI becomes more embedded in business operations, the market demand is surging, creating substantial growth opportunities. Our target market is expanding rapidly, especially among enterprise customers who tend to have high switching costs. This means once they adopt our solutions, it's more challenging for them to move elsewhere, leading to sticky clients and long-term relationships. That stickiness translates into a recurring revenue model, which is a major strength, providing predictable and stable income with strong unit economics. This recurring revenue, combined with high annual recurring revenue, or ARR, makes our business highly attractive. Investors see the potential for sustained growth and profitability, and that's why venture capitalists are racing to invest in companies like ours, because they recognize the immense opportunity in the AI infrastructure space and the strategic advantages of our business model. All of these factors come together to make this an exciting time, with a clear trajectory toward public markets and a compelling story for investors. Think of it like selling shovels during a gold rush. Instead of betting on every individual AI application, what smart investors are doing is investing in the platform that powers them all. This platform serves as the backbone, enabling multiple AI applications across various sectors. This approach offers wider applicability, meaning it can support many different use cases and industries, which makes it a more resilient investment. Plus, when it comes to mission-critical services, those essential core functions, these usually come with long-term contracts. That translates into lower churn metrics, or in other words, customers tend to stay longer. And speaking of customer loyalty, enterprise clients rarely switch their infrastructure providers once they've committed. This results in higher retention rates, giving investors more stability and predictability. So why does infrastructure win in the long run? Because AI infrastructure is the foundation that supports AI apps. It's a classic picks and shovels strategy, investing in the essential tools rather than the fleeting applications. By focusing on the infrastructure, you're backing the backbone of the entire AI ecosystem, which tends to be more durable and scalable over time. Now, let's look at some of the critical challenges and risk factors we face today. First, government mandates for data residency are becoming more common, and they really add a layer of complexity to our operations. These regulations often require data to stay within specific geographical boundaries, which can complicate how we manage and store data internationally. Next, evolving data protection laws and industry regulations mean we need to stay constantly adaptive. What was compliant yesterday might not be enough tomorrow, so staying ahead requires ongoing effort and resources. Then, we have the dominance of cloud providers like AWS, Azure, and Google Cloud. Their scale gives them a significant advantage, making it tough for smaller or newer players to differentiate themselves in this crowded market. Finally, building and maintaining data centers involves huge upfront investments, which can put pressure on cash flow. These high capital expenditures are a major consideration when planning for growth and expansion. All of these factors, regulatory complexity, rapid legal changes, intense competition, and capital costs, are interconnected risks that we need to navigate carefully as we move forward. Neysa's funding battle really highlights how AI combined with cloud infrastructure is emerging as India's next major strategic investment wave. It's fascinating to see how global venture capitalists are now competing fiercely for high-potential deep tech startups that could reach billion-dollar valuations. This signals a maturing Indian tech market, attracting significant international capital. At the same time, it's creating a robust ecosystem for infrastructure startups, which is crucial for building local capabilities. This trend also encourages deeper innovation in the tech space, especially in areas that can decrease our reliance on global cloud giants. Reducing foreign dependence is not just about cost savings, it's about gaining more control over our digital future. Strengthening India's position in the global AI race becomes possible when we boost our domestic AI infrastructure, making us more self-reliant and competitive. Strategically, these developments have huge implications for India's tech ecosystem. They position us to innovate faster, attract more investment, and build a sustainable, resilient tech foundation. Overall, Neysa's story exemplifies how these elements are shaping India's journey towards becoming a leading player in the global AI and deep tech landscape.